Good morning. Today is Monday, April 11th. The markets have opened to the downside here after a week in which the markets fell in response to the Fed's plan to combat inflation. Let me roll the intro real quick, and then we will take a closer look. Life is too short to worry about what the next headline could do to your life savings. Hi, my name is Eric Hagan, and I keep my thumb on the pulse of the economy and the markets so my clients can focus on the things that are actually important to them. Thank you for joining me the next few minutes on today's weekly economic video update. Stock prices fell last week in response to the Fed's plan to combat inflation, which staked out a more aggressive stance than investors had anticipated. The Dow Jones Industrials Average slipped 0.28%, while the Standard & Poor's 500 fell 1.27%. The NASDAQ Composite Index dropped 3.86% for the week, and the MSCI EAFE Index, which tracks developed overseas stock markets, slid 2.05%. After a positive start to the week, stock prices turned lower on a more hawkish tone from Fed officials. On Tuesday, investors were surprised by comments from Fed Governor Lael Brainard, one of the Fed's more dovish members, who suggested the Fed could take a more aggressive approach with interest rates. The unease extended into Wednesday when minutes of the last Federal Open Market Committee meeting, or FOMC meeting, were released, signaling a potentially faster pace in both interest rate hikes and the wind down of the Fed's balance sheet. Yields climbed steadily throughout the week as the bond market digested this new information. Particularly hard hit were high valuation stocks, as reflected in the 4% drop in the NASDAQ. After raising the federal funds rate by 0.25% last month, the minutes from the March FOMC meeting made it clear the Fed is serious about fighting inflation with higher interest rates. Fed officials indicated they might have hiked rates by a half percentage point last month in March had it not been for the uncertainty created by the invasion of Ukraine. Multiple Fed officials suggested that future rate hikes may reach 0.5%. Fed officials also discussed allowing up to a $95 billion monthly runoff of the Fed's balance sheet, a faster pace than the market expected. As always, we will keep our thumb on the pulse of what's happening and will automatically make changes in your managed accounts as we feel are in your best interest. If you are not having us invest your life savings for you, I invite you to learn more about how that would work at www.smartmixportfolios.com. All right, that is it for this week's summary. Thank you for staying until the end today. I've got a riddle for you. Remember, if you're the first person to post the correct answer down below this video, whether you're watching here today on Facebook or on YouTube, then we'll send you a gift card for coffee on us. All right, so today's riddle is, when you take away the whole from this, you still have some left over. What is it? When you take away the whole from this, you still have some left over. What is it? Again, be the first person to put the correct answer down below this video on either Facebook or on YouTube, and we'll send you a gift card for coffee on us. And if you'd like the answer to last week's riddle, please visit www.investwithccg.com/riddles to find out. And then lastly, later on today, I will be emailing out our full weekly economic update. If you're not getting this email and you would like it, you may subscribe at www.investwithccg.com. Hey, this is Eric again. That's it for today. Don't forget to subscribe before you leave. Here at Capital Consulting Group, we provide personal wealth planning and fiduciary investment management solutions for individuals, couples, and families. To learn how to see your entire financial situation, both today as well as every year into the future, go to clearfinancialfuture.com and watch the short 2-minute video. To learn how we give our clients' life savings the attention it deserves and to see how we're doing, visit smartmixportfolios.com. And lastly, if you'd like help investing your 401k at work, visit me over at 401kinvestmentpros.com. Thank you again for your time today. I'll look for you next week.